Hello, Oracles. Well, we had good news today when we got the CPI data that came out and it beat expectations. The market cheered this initially, and then everything sold off, Tesla included. So, we're going to get into the numbers. We're going to show you guys what the CPI numbers were when they came in. We'll go over what PPI expectations are for tomorrow, and we'll take a look at the charts as well when it comes to Tesla to see it's ironic that it traded right in between a certain range, and we'll see where we're going to be trading going forward with earnings coming up next week. So we'll get into all of that in just a minute. All right, so looking at the charts here, again, we got that CPI data that came out this morning, ran up to 191 right at this level of resistance that we've had marked here. And then we ended up closing right at this level of support at 180 at the bottom, trading specifically within this range. I know. Long term fundamentals are the only thing that truly matter. Following the charts does not. But for anybody who's looking for opportunities to buy lower, or for anyone who swing trades, learning the charts is an important factor in all of this because you're going to trade along with that. We have these levels here that the stock hovers around. It sticks to, it bounces off of them. And today traded exactly between these two levels. So you can't deny that it actually does follow some of this. With that said, we still have the gaps down below us. And I think at some point those will end up getting filled down to 114. Now, the RSI is coming in at 44.67, a little bit below midway. We have room to move either direction. So we could sell off or we could run up. Again, we've got earnings season coming up. Tesla is next Wednesday on April 19th. We have Netflix coming out the day before. Typically, Netflix has come out the week before, but this time it's the day before. Tesla has moved along with Netflix because it kind of gives us an indication as to how maybe earnings season is going to go. We will see if we get affected by that next week. But until then, we have the PPI going on tomorrow. And so the CPI reading that we got today, again, we discussed it on the live stream last night. The forecast was 5.2%. Last month was 6%. We actually came in better than expected at 5%. This is very good news. Now, again, taking it with a grain of salt, seeing as all the adjustments that they made to last year's numbers, but we are still trending in the right direction. So this is very good news. Now, as we also discussed on the live stream last night, we never know how it's going to be manipulated. Was this all priced in? Did they price in a beat anyway? Now we are seeing that. Is this going to be a fake out? Maybe tomorrow we go the other direction and we actually run. So hard to predict which way the market's going to move. So I try to look at the underlying numbers and the underlying meaning of all of this. The underlying meaning is inflation is coming down. That's good. That's important. Whichever way the stock market is going to fluctuate along the way, to me, doesn't mean all that much because it's so unpredictable. But we are trending in the right direction. We are coming down. This may end up leading the Fed to pause versus doing a 25 basis point hike. That FOMC meeting is on May 3rd and 4th. So if we get PPI data coming in tomorrow that is also good, we may see that pause instead of a rate hike. And now the other piece I wanted to look at was the month over month data. As we had mentioned, last year around this time, inflation really started taking off again. So year over year numbers should be expected to come down significantly. So I really want to pay attention to the month over month numbers because that's giving us a better indication of where we are truly trending. The expectation forecast was 0.2%. Last month was 0.4. We actually beat expectations here as well, came in at a 0.1%. When you annualize that, that is a 1.2% annual inflation rate. That is good. That is below the 2% that they want to have this at. So that is in the right direction. Again, another indication that we are moving in the right direction and the Fed can pause instead of raising rates more. And now when we look at the PPI expectations, tomorrow it is a massive drop down to 3% as a forecast, where last month was at 4.6%. Now, again, this has been a leading indicator to CPI. So last month we had a forecast of 5.4 and we beat that. So this month we had a forecast of 5.2 CPI and we beat that. So this could be a leading indication for CPI next month. But coming down to 3%, That's a huge drop coming. So even if we come in a bit above that, I still think it's a win. Again, anytime we're moving in the right direction, that's a win. So anything coming in under 4.6% is good. Coming in at the 3% is outstanding. And then looking at the month over month for PPI, last month we had a forecast of zero point 0.3 and we actually came in at a negative, which is disinflationary pressure. So this month we have a forecast of 0.1%. It's actually a good thing to come in at a positive number. The 0.1% is a good number to come in at. We don't want to go into disinflationary pressures. We don't want deflation. That's not good either. We just want this to subdue and settle down. So a 0.1% would be good. If we come in the negative, not a terrible thing. We just don't want to see that consistently going into the negative. And if we do, we want to make sure it stops soon so that this way we can still see that inflation. And I know it sounds silly to talk about how we want to see inflation, but the reason the Fed wants to keep an inflation rate somewhere around 2%, that keeps the economy steadily growing. When you have a small inflation like that, what it does is it encourages people to continue buying now, because if you have disinflationary pressures and you have deflation bringing everything down, people then stop spending altogether because they're saying, well, if we're not spending and the prices are going to keep coming down, we'll just get by with what we have and we'll wait till the prices come down even more. In doing so, it creates that downward spiral, and then you have an economy that's not growing and it's trending in the wrong direction. So you want that nice, steady 2% growth going up to stimulate the economy moving in the right direction. So again, we still want to get it down. We don't want it to be running too high, but if we get it back down to that 2%, we can then push up from there. And now again, what I believe the Fed's goal is to get the interest rates just above where the CPI and the inflation numbers are. Right now, the interest rates are at 4.75 to 5%. So we just saw inflation coming in at 5%. So we're right at that level right now. So if we get a PPI reporting that comes in that shows us an indication that we could see even lower CPI next month, we're going to be in that position where, is the Fed going to pause or is the Fed going to raise rates? Now, the Fed may pause. We also have the jobs report to consider. We have PCE that we still have to get in at the end of this month. And the Fed prefers to use the PCE report anyway. But looking at the numbers, we may still end up seeing that 125 basis point hike. So the Fed knows for sure that the interest rates are above inflation. Then once they're up there, it's like they can control it and push it down. So interest rates are high. We're seeing inflation coming down. So then when the inflation comes down enough, they can say, all right, we can now pivot and bring rates down because the rates are still going to be above inflation. That's my take on all of this, is how they're going to come down with that pivot and the timing, but it still could take a while to get to that point. So that's why the Fed's saying that when they do end up pausing, they're probably going to pause for about a year. Now, the problem is inflation's going to be coming down along the way because it's still going to take about 6 months for all of these interest rate hikes to catch up to that. So again, going back to the fact that they use the lagging data, this is what ends up causing a potential recession, is the interest rates being high for too long, and by the time they do end up pivoting, we're already sliding into that recession. Then the Fed pivots, but the damage is already done, and then by the time the new interest rates that are being lowered take effect, the recession is already happening. So it takes about 6 to 12 months for those interest rates and that pivot to take effect. Then it can pull us out of it, but we'll be in that recession for maybe 6 to 12 months along the way. So that's just the way my mind is playing it right now. Still have to see what the Fed's going to do. Still have to see all this data coming in. But to me, right now, based upon the information we have, I think that's the way this is all going to be playing out. So if that's the case, knowing with the election year coming up next year, maybe some playing around with these things, timing is going to be very tight. So we may end up seeing the recession hitting at the end of 2024, which honestly, I think may be too late. So we might actually see the recession hit sometime at the end of this year or beginning of 2024. And then when we come to election time, we can have the Democrats coming out saying, look, we got into this situation, but we're pulling ourselves out of it and the economy is now growing. And then we can have the Republicans coming out and saying, well, why did you get into the recession in the first place? And we'll have all that madness and debating and political crap going on at that time. But that may be how it all ends up playing out. Again, that's over a year away. It's about 18 months away before we get to that point. We'll just wait and see how it all plays out. In the meantime, tomorrow's the next data. And the important thing is inflation is coming down. And the other piece to play into all of this, sliding away from all of the numbers, and I've got it on the screen behind me here. Any of you guys who happen to hear the Twitter space that Elon did with BBC yesterday really came out and kind of showed where BBC stands. A lot of people thought that the BBC was a publication that came out and was kind of in the middle and just gave out true facts. But as Elon was kind of grilling the reporter, come to find out they really have some misinformation themselves and they couldn't really back it up with any data. So, if you guys haven't seen it, I definitely encourage you guys to go and listen to that Twitter space. Obviously, it's over on Twitter. I don't know if there's any videos of it out there. If any of you guys have seen that, please share it in the comments below so that everybody else can see it as well. But it's very good to hear these things because you can hear how much everything in the media gets manipulated and how you hear what narrative you want people to hear. So, is that the same thing we're hearing when it comes to CPI, PPI, inflation, interest rates, and all of that? Are we just hearing what they want us to hear? Now, I don't mean to be putting on a tinfoil hat with this. I just want to present that to you guys so that you can question it yourself. Everybody has to do their own research. Everybody's going to have their own opinions on this, but just ask yourself these questions realistically. Take a step out of it and say, do you fully trust all of the information that we are getting? Thinking about last year, all of the CPI and PPI data that we got was adjusted in February, and the numbers that were originally given were not the right numbers. They all got adjusted. So just things that I go, and this is one of the things that I always say is question everything. So always go out there and just question the things that you hear when it comes to anything on the media, anything in the news. Just take everything with a grain of salt and say, is this all making true sense? What is the actual underlying meaning of all of this? And sometimes the truth lies somewhere in between what you hear from the multiple different sides of every story. So, all in all, today, I know the stock price did not move in the direction that we wanted to by the end of the day, but the important thing, again, is inflation is coming down. The stock will rebound at some point, whether it rebounds when the Fed pauses or it rebounds later. It doesn't matter, in my opinion. We will be turning around and the stock price will go to all-time highs eventually. And that's the most important thing in my eyes because I'm playing it long term. And I think that's what the important thing is. These are going to be tough times. We are going to get through them. Just don't know when. And when we do, we will all be celebrating when that does end up happening. So let me know in the comments below, how do you guys feel about the CPI report today? Do you think PPI tomorrow is going to beat expectations as well? Or do you think it's going to be a miss? And again, knowing the market's going to move whichever way it wants to, you guys can place your bets in the comments below and let us know which way do you think the market is going to move based upon the PPI data tomorrow. That's all I've got for you guys today. Thank you so much for watching. I appreciate all of your support. Have a great one.